You see in the headlines, right? Historic gains, markets at an all-time high. All the numbers are pointing up, but something just feels off. Because at the same exact time, you might be looking at your own life, your rent, your grocery bill, your credit card statement, and thinking, man, this has never felt harder. So let's dig into how both of these things can possibly be true at the same time. So you've got this one story that the headlines are screaming, the stock market is a rocket ship, just this picture of incredible success. And then on the other hand, you have the reality that so many of us are actually living, a daily grind, where every single dollar feels like it's being squeezed. It feels like these two stories are happening on completely different planets. And really, it all boils down to this one simple, incredibly frustrating question. It's a question millions of people are asking themselves right now. And in this explainer, we're going to unpack that feeling. Because the answer isn't just about money, it's about what the word economy even really means anymore. Okay, so first things first, we have to kind of deconstruct the headlines. When you hear that the economy is doing great, what are they actually talking about? Well, here's the crucial first piece of the puzzle. For a lot of the major news outlets, the term "the economy" has basically just become shorthand for one thing: the stock market. And it makes sense, right? It's an easy number to report on, it changes every day, and it makes for a simple headline. If stocks are up, hey, the economy's good. If they're down, the economy's bad. But that is a very, very narrow and, as we're about to see, a pretty misleading definition. Yeah, you hear these names thrown around all the time: the S&P 500, the NASDAQ, the Dow Jones. Their little ups and downs are presented to us like the entire nation's financial report card. But here's the question that almost no one in those reports stops to ask. Who's actually getting the grade here? Whose success are we really measuring? And this right here, this really gets to the heart of the disconnect. The reality is a huge chunk of the population, we're talking around 60%, don't directly own a single stock. That means when the market hits some new record, for the majority of the country, it's just a number on a screen. Nothing in their day-to-day financial life actually changes. It's like they're watching a game they're not even playing. Okay, so if the market's success doesn't really connect with the average person's life, what is driving it? This brings us to a really important idea called economic divergence, this great separation between Wall Street and Main Street. Well, it often comes down to a pretty simple and honestly sometimes brutal formula. First, companies raise the prices you pay for things. Then, at the same time, they cut their own costs, which can mean painful things like layoffs. Now on paper, this makes their profits look absolutely fantastic, which in turn pushes their stock price way up. The result? The company's stock looks stronger than ever, but that strength was built on the backs of consumers paying more and maybe employees who lost their jobs. So this is exactly what we mean by divergence. It's not that the economy is collapsing, it's that it's splitting in two. Imagine two train tracks right next to each other, but moving in opposite directions. One of those tracks is for corporate profits and stock values, and it's just rocketing upward. The other track, though, is for wages and a cost of living, and it's struggling just to keep pace. All right, let's switch gears and jump onto that other track for a minute. What does life actually look and feel like for the people who are living that other story? For a lot of people, it looks like this: the constant stress of credit card debt just piling up, the feeling of living paycheck to paycheck. It's that background anxiety that a single unexpected medical bill could completely derail everything. And it's the feeling that those traditional milestones, like owning a home, are just slipping further and further out of reach. And look, this isn't just a vibe or a feeling. The hard numbers back it up. Total credit card debt in the US has now surpassed a staggering $1 trillion. That is a crystal clear sign that for millions of people, their income is just not keeping up with their expenses. They're having to bridge that gap with. So when you're dealing with all of that pressure and you turn on the news and see them throwing a party for a booming market, it creates this deep psychological disconnect. You don't feel hope or pride. You just feel this quiet, kind of painful realization. That success they're all celebrating, it has absolutely nothing to do with me. And that feeling, it has a real cost. This isn't just about spreadsheets and market indices. It's about the psychological toll this whole divergence takes on people. There's this quote that just nails it. You don't need to read some government economic report to know how you're doing. Your personal economy is right there in your grocery receipt, it's in your rent payment, it's in the balance of your bank account at the end of the month. And that lived reality, it is so much more powerful than any statistic. And this is maybe the most important point. When the official story is, everything is great, the economy is booming, but your daily experience is screaming the exact opposite, it doesn't inspire confidence. It breeds frustration. It makes you feel unheard, invisible, and maybe even angry at a system that seems to be celebrating a success that you are just not a part of. So all of this, it pushes us past the simple data and forces us to ask a much bigger, much more profound question about the very purpose of our economy.
Okay, so here is the fundamental structural issue. A huge portion of modern wealth isn't held in salaries or savings accounts. It's concentrated in financial assets, like stocks. This has created a system where wealth grows from owning things, not just from earning a paycheck. And if you're living paycheck to paycheck, you're pretty much locked out of that first part of the equation.
So, when we say the economy is growing, what we really mean is that the value of those assets is going up. And if you don't own those assets, you are, by definition, left out of that growth. You're just left standing on the sidelines, watching a parade that isn't for you. Given all of that, you can start to see that maybe we've been asking the wrong question this whole time. The mechanics of why the market is going up, that's kind of secondary. This is the real question we need to be asking. Who actually benefits from the way things are set up? Because if economic growth only enriches a small fraction of the population, while everybody else feels more and more squeezed, then we have to ask, who is this economy really working for? And that really brings us to the final critical takeaway. The biggest danger we face might not be a sudden dramatic market crash. It might be the slow, corrosive collapse of public trust and the system itself. This growing belief that the economy is no longer a shared project, but a game that's been rigged for a select few. And that's a much, much harder crisis to fix.